It is Tax Tip Tuesday, and we are joined by Walter Kinney with PorterKinney this morning to talk about retirement planning when it comes to your taxes. So good morning, Walter. Thanks for coming in.
Yeah, good morning.
As always. And so when it comes to retirements, obviously there's a little bit of a break you can get, I know, if you are investing in your future. So kind of tell us a little bit about that.
Sure. So retirement plan contributions are kind of one of the more available and powerful tax deduction things that most people have an option to use. The general idea being if you put money into a qualified plan, you don't have to pay taxes on it currently. So you put $5,000 into your 401k, you don't have to pay tax on that now. And when you take it out in the future, hopefully you're in a lower tax bracket because you're not working full time. So there's a little tax efficiency that you can pick up.
Okay, definitely. So when you're looking at 401ks, IRAs, those types of things, what should you be looking into? What type of planning should you be doing?
Sure. So I would say for most people, if they have an employer plan, that's a great first place to look because often there's a matching contribution or something like that built in, or if you put in 3%, the employer puts in 3% or something like that.
To a certain extent, usually.
Yeah, exactly. So you want to at least take advantage of what they're willing to contribute because it's almost free money left on the table if you don't. If you don't have an option through your employer, there are IRAs and Roth IRAs, and it's a little bit varies by situation, but there's options to put usually up to about $6,000 per spouse into each of those plans and get a deduction.
Very cool. So what would you recommend in terms of like a 401k or a Roth IRA? Some people argue one is better than the other. What would you say? Does it kind of depend on your employer, what they offer? Or?
Yeah. So a 401k gets you a current year deduction. A Roth 401k gets you a future year tax benefit. So it kind of depends on your current year income level, what's best fit.
Okay. And of course, talk to your tax preparer, someone that can advise you, of course, for the best guidance, I would assume. Thank you for coming in.